And I'll just get right to it, actually, because as we mentioned, Hong Leong Bank has significant presence and has a unique pulse, at least, of what's going on in Vietnam, Cambodia, and Malaysia. Let's start with Malaysia. What are your clients here actually telling you or asking you about with regards to this ever-changing tariff policy that threatens to change the economic outlook for their businesses and the country as a whole?
So, JP, I think a lot has happened in the last 12 days or so, since April 2nd. When it initially was first announced, I think there was quite a bit of fear initially because a lot of uncertainty how exactly this will work out. But I think in Malaysia right now, the customers that we talk to and ourselves looking at the situation is a bit more measured at this point in time. We're looking at how the impact could come to Malaysia, specifically from the GDP point of view. Initially, we had an outlook for our GDP at about between 4.5 to 5.5%. But right now, most of the houses have downgraded a tad between 4 to 4.5. We are in that house as well, in that camp. But right now, it's turned from a bit of a, I would say, initial panic situation almost to more of a measured monitoring of what's happening. And people are starting to talk about opportunities right now.
And what kind of opportunities are they realizing as the smoke, or dare I say the panic, comes down after the last 2 weeks? What are they realizing that they didn't amidst that frenzy and that fear, for lack of a better term, that gripped markets and countries over the last 2 weeks?
I think first the dialing back down of the tariffs from, like you mentioned, Hong Leong Bank were in Malaysia, Vietnam and Cambodia. Malaysia was initially slapped with 24%, and then Vietnam with 46%, and Cambodia had 49%. So initially that was a very, very high number, and if it were to be seen through, I think there would be a lot of impact. But we all heard about the 90-day pause and the recession, or rather the receding back to the 10% level. Now it's given a bit more calm to the market at this point in time, and the visit of President Xi, right, which is what you guys are doing this program for essentially, is actually bringing some optimism. I think we were talking about Malaysia actually celebrated 50 years of state relations with China. So we think that there will be opportunities, right? We're looking forward to President Xi's visit and see what packages, what deals could be unfolded.
Yeah. What do you think might be on the table in terms of opportunities, and why, and also just highlighting how important this visit by the Chinese president is, especially in this day and age? Can you talk to us what you see as most significant with this visit and what opportunities this will provide for Malaysia and some of the markets you're actually operating in?
I think maybe two key areas to call out. One would be infrastructure. We are really looking at the East Coast Rail Line, the ECRL. That is already well underway. We're looking at that completing hopefully sometime next year. Hong Leong Bank has a sizable presence on the east coast of Malaysia, east coast of Peninsular Malaysia, and many of the towns and cities that it's passing through potentially will see a lot of revival in that. So infrastructure, and also potentially the HSR as well, high-speed rail to Singapore, right? We talked about that some years ago. So we're hopeful maybe that might be revived, could be on the table for discussion. So infrastructure will be one big area we're looking for, because the clients that we support a lot of doing SME and construction and contract financing, and that kind of infrastructure investment in the coming years could be well for Malaysia.
Absolutely. I do want to talk about what the bank's outlook is at the moment with regards to these changes, but I want to ask you first about Vietnam and Cambodia, because the outlook and the reality for these two countries is quite different from Malaysia. Not only do they face higher tariffs, but you might say that Malaysia is a bit more diversified in terms of their trading partners versus that of Vietnam and Cambodia, which exports more of their goods to the U.S. As compared to, say, Malaysia. Again, what are your clients there asking, and how different are the questions you're hearing from Vietnam and Cambodia versus your clients in Malaysia, for instance?
Well, Hong Leong Bank, we have a relatively newer portfolio, about 10 to 15 years in these two markets.
Okay.
And our clients are mostly in the SME space. So in the initial period when the tariffs came out, there was, as I said, a bit of a worry from especially the risk management team. We quickly went to look at the portfolio, whether there are any clients that specifically export to the US and how they would be impacted. But thankfully, we found that that was not a very large number in any meaningful way. Many of our clients have well-diversified portfolio to other parts of the world. So, but I think the concern is more about the second-order impact, not the first-order impact from direct tariffs. From what we've seen, how things are likely going to be dialed down, there's going to be country-to-country negotiation. The impact of exchange rates, the impact of interest rates, I think potentially will be what we should be more careful about in Vietnam, in Cambodia, and even in Malaysia.